Hi everyone, my name is Casey Norton and the company I chose is TJX Companies Inc. So just a little background on TJX. They are the leading off-price apparel and home fashions retailer, not just in the US but worldwide. They have 7 retail chains, which include 3 e-commerce stores. They also have 3,000 stores that span 9 countries and they're on 3 continents, so it's a huge operation. Their mission is to deliver great value to customers every day by offering quality designer merchandise that's normally 20 to 60% below traditional retail prices. Their demographic is middle upper class neighborhoods. It's for people looking for designer items without that huge price tag. Next, moving to the TJX timeline. So the company is a little over 40 years old. It was founded in 1977. And since then, the company has grown tremendously. The company has expanded beyond just the US. It has expanded into Canada, Europe, and even Australia. The company has even opened 3 e-commerce sites. Their first was in 2013, as you can see on the chart there. They launched their first e-commerce site with TJ Maxx. Since then, they've opened Marshall's e-commerce site and then also a Sierra Trading Post e-commerce site. So moving on to market share. So this is just a little chart that shows brand versus price. So as you can see in the bottom right-hand quadrant, that's where TJ Maxx is located. TJX is located. It is on the designer brand side and it's at the lower price end. So as you can see, its competitors in the rest of the industry, you can see Macy's and Dillard's in the top right-hand quadrant. They offer designer brands, but at that higher price point. And then if you take a look on the left-hand side of the chart, you can see their other competitors. They're the non-designer brands, and you can see where they vary on price. So in the current industry, department store industry is actually moving away from the traditional brick and mortar sales, so the in-person shopping, and they're moving towards online retail. So a quick little statistic, in the 2019 holiday season, brick and mortar sales grew by 1.4%, which is fairly small. And then e-commerce grew by over 6 times that to 8.1%. So even though the industry as a whole is moving away from brick and mortar, TJX is still showing growth. They still are attracting foot traffic. That's because buyers are looking for an in-person product interaction. They're looking for something called the treasure hunt shopping, where they don't know what they're looking for, but they know they'll find something good if they just search. So moving to the external environment, the Pastel analysis, which describes the driving forces of change in the industry. So political is that because they interact and have businesses overseas, they may face price regulations or even trade tariffs. Next is economic, which relates directly to the economic cycle. So if the economy is doing well, consumers have additional income to spend on discretionary items, which includes shopping. And if the economy is doing poorly, we'll see less shopping as consumers will need to spend their money on necessities. Next is social. This refers to the demographic and skill level of the population. So TJX stores would not perform well in low-income neighborhoods or areas just because it doesn't fit their demographic. Next is technological. So recent technological developments in e-commerce sites in the industry, they are using technology to make it easy to order products that are found in stores through the store's online platform. Legal is about consumer protection in e-commerce. It's about protecting personal information such as credit cards, names, addresses from fraud. The next is environmental. So some things that could affect the industry or the business are weather, climate change, recycling. So this would include reducing the company's carbon footprint and reducing the impact that the company has on the environment. Next is moving to the 5 forces. So the first force is rivalry among existing competitors. So TJX operates in an extremely competitive department store industry. As you can see off to the left, You can see the company's major competitors, which include Target, Macy's, Kohl's, Nordstrom Rack, and Ross. So we can even narrow down their industry even further to the off-price department store industry, which means they're offering high-quality products at lower prices. And those companies that are direct competitors are Nordstrom Rack and Ross. So the rivalry among existing competitors is quite high. Next is threat of new entrants. So some of the new entrants are Poshmark and The RealReal. They also sell designer products at lower prices, but their products could range from extremely high-priced items to extremely low. So their range of products are just different from TJX stores. Also, they are not on the same size or scale of TJX. TJX has an advantage over these smaller retailers because they just operate on such a larger scale. So the threat of new entrants is quite low. Next is bargaining power of suppliers. TJX uses so many suppliers, around 21,000 suppliers around the world, and suppliers, as a result, suppliers don't have much control over price, as TJX could just choose to work with another supplier. Next is threat of substitute products or services. TJX only has a few substitutes, and their substitutes include Macy's and Dillard's, because these stores also offer high quality products, but they're just selling them at that higher price. And the substitutes do not appeal to the same demographic that TJX targets, because their demographic is looking for deals. They're not looking to pay the full price. So as a result, this is a weak force. Lastly is bargaining power of buyers. Buyers are actually limited to the number of firms that offer the same designer products at the same low price as TJX. Their options are quite limited, so that means they don't have much control over prices. So as a result, this is also a weak force. Next, moving to the internal environment. I want to touch on a few of strengths, weaknesses, threats, and opportunities that the firm faces. One strength is that they operate thousands of stores around the world. One weakness is that the stores are heavily concentrated in the US market. Threats are that they have the potential to compromise customers' information. They hold personal information and they should protect it against fraud. One opportunity could be to increase market share, then also increase their e-commerce business. Next, looking at the Eliminate, Reduce, Raise, and Create grid, which discusses TJX's strategy. So this is actually competitive strategy options. So one option could be to eliminate salespeople on the floor of the stores. Shoppers at TJX stores don't really need salespeople. The shoppers are looking to find that great deal. They're looking for that great find. They don't necessarily need someone to assist them. Next could be to reduce the impact the company has on the environment. That just means reducing their carbon footprint. Next is raising the company's online presence. Their online e-commerce sites do not have an extensive catalog. They don't have all of the products that they have in their stores online, so it may be best to build out their site. Next is creating sections like the runway found at TJ Maxx at TJX's other stores. So the runway is just a section that offers higher priced items, more designer items than TJX stores would normally carry. So it would just attract a different demographic. Moving to the Balance Scorecard. So the Balance Scorecard describes how the company can sustain their competitive advantage. It is broken into financial, customer, internal business, and learning and growth. So financial just means that the company wants to be profitable. And one idea here could be that the company could buy more inventory during the holiday season, so they have more to sell just to increase their profits during that time when more shoppers are out and about. The next is customer. This is all about customer satisfaction, customer retention, trying to keep the stores fully stocked with the most desirable products for customers. Next is internal business. So this is maintaining strong relationships with suppliers. This is all about social responsibility, so remaining environmentally friendly, trying to reduce their carbon footprint. Next is learning and growth. So that's just expanding and opening new TJX stores, growing human capital, continuing to provide training for their people to just continue to grow their business. Next is the financial analysis. So as you can see here, TJX has grown and their net income has increased over the last 5 years. And then I broke out their net sales by department. So they have 4 departments that they're broken into. They have Marmaxx, Home Goods, TJX Canada, and TJX International. Marmaxx is their biggest department. They have TJ Maxx, Marshalls, Sierra Trading Post, and then all 3 of their e-commerce stores. And as you can see here, the highest net sales amount is in Marmaxx. That's just because they contain the most amount of retail chains. Next, I want to break it out between competitive comparison. So we have TJ Maxx and then 4 of their competitors. So as you can see from 2017 to 19, TJX, their net income has continued to grow, whereas their competitors, you've seen a steady decline. I believe this is because stores are the industry as a whole is moving away from brick and mortar shopping. So the traditional department stores, their net income is declining as malls are seeing less foot traffic, whereas TJX, they've seen more foot traffic. So this continues to help their net income grow. Moving on to core competency, this is their brand equity. So they're known for offering name brand designer products at reasonable and low prices. They offer this treasure hunt experience where shoppers search through racks to find a perfect item. They find the best finds, which they know can quickly disappear, which then trains shoppers to make the purchase now because when they come back, they may not see that item again. Next is supplier relationships. TJX has extremely strong relationships with their 21,000 vendors that are located in more than 100 countries. So with these relationships, they're able to offer lower prices that are 20% to 60% below full price retailers. This is because suppliers offer buying opportunities, which include order cancellations by department stores, or if a vendor needs to clear merchandise at the end of a season, that's how TJX is able to obtain the products. Next is development of talent. TJX fosters the growth of their people. They provide an 8-week intensive training program just to foster development and for the employees to learn all about their position before they start. Can TJX survive and thrive in an environment that's moving away from traditional brick and mortar shopping? That's one strategic issue that plagues the company. The next is, should TJX build out and enhance their current e-commerce site to keep pace with an industry that's moving toward online retail? This would mean allocating additional funds to the company's e-commerce business. So moving to recommendations, TJX should continue to expand their footprint and continue to open new stores worldwide. The company continues to drive foot traffic through rapidly changing their merchandise daily, and then also appealing to those that are interested in the treasure hunt shopping experience. TJX should also continue to build out their e-commerce site just to keep pace with the trends in the industry. They could invest additional resources in creating a catalog to include more merchandise on the site. In conclusion, I think TJX should